I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So
Bitcoin has emerged as the institutional safe haven asset.
The volatility of Bitcoin, the asset, was nowhere to be found.
CEO Michael Saylor tweeted at Musk back in December, urging him to get into Bitcoin.
Bitcoin is an extraordinarily asymmetric upside asset.
What does the future of Bitcoin hold? And do you think it's too late to opt in? And I'm interested in, I know I have my opinions, but what are your drivers for the price over the next few years?
Well, I definitely don't have a crystal ball, but I think, at least from a framing perspective, I'll tell you how I think about it. I think about the first chapter of Bitcoin as kind of the Genesis block until, let's call it now. And that's been all about Bitcoin, the asset, which is really the theme of this conference. And what's driving right now accelerating institutional adoption is the view of Bitcoin being de-risked, right? And I think that's why you're just going to see a wall of money. I know it. I have an order book, a wall of money coming into the asset class. So let me put you to sort of frame this out in the mind of an institutional investor, me. Okay, I'll put you in my mind. My partners and I bought more Bitcoin in 2020, last year, than in 2013 through 2019 combined. And as our fiat businesses continue to inflate and accelerate, which they are, I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So what's going on? I mean, we're conservative, institutional, professional risk managers. It's what we do for a living, and it's why investors, including the most conservative investors in the world, have entrusted us with $20 billion in our alternative businesses, our non-Bitcoin businesses. And to us, conservative us, Bitcoin is de-risked. Why? Well, when I look at Bitcoin, I see it above $500 billion of market cap. I see millions of people using it every day with a clear line of sight to tens of millions of people using it every day, and then billions. I see 12 years of uninterrupted, safe operation of the network. When I look at all that, the left tail of the zero outcome is gone. And that is the key observation. So when I talked to institutional investors a few years ago, I would get the question, what's the chance of Bitcoin going to zero? And a few years ago, that was an interesting conversation. Last week, a client asked me, what's the chances of Bitcoin going to zero? I said, what's the chances of Christianity going to zero? It's just not. It's just left. It's left the station. And so remember, at Stoneridge, we are risk managers. We do it professionally. And what you're talking about here with Bitcoin is an extraordinarily asymmetric upside asset. We can debate whether it's good or bad, but I think we can't debate the asymmetric upside to it. It's perhaps the most asymmetric potential right tail asset in the world, in history. And you chop off the left tail, we all know what happens, right? To the mean, it just explodes. It explodes. You chop off the left tail, the mean explodes. And you combine that with the macro environment, the money printing presses running at full tilt. I mean, the blue wave in the US, complete political dysfunction around the world. I mean, for us, at least at Stoneridge, fiat reserves are like a hot potato in our hand. We make them in this business. We can't get them out of our hands fast enough and put them into Bitcoin. We could convert them as quickly as possible. So yeah, we're risk managers at Stoneridge, but we're also capital allocators. You can't eat risk management. You can eat making money in the markets. And we believe in the power of Bitcoin, but if we didn't think we'd make money, we wouldn't invest a penny.
So you're calling chapter 1 of Bitcoin, 2009 through today, Bitcoin the asset. And I guess that really is the process of going from 0 to 1. Bitcoin didn't exist, now it does. What's chapter 2?
Well, I think chapter 2 is going to be incredibly exciting. And chapter 2 builds on Bitcoin the asset, and it adds Bitcoin the network. In chapter 2, Bitcoin the network, it solely leverages Bitcoin's proprietariness as an open source monetary network. In chapter 1, we reached millions. In chapter 2, we're going to reach billions, and we're going to do it quickly. And chapter 2 starts right now. So I'll give you a flavor of chapter 2. Say I want to send $1,000, I'm sitting in New York right now, to a friend in Milan, Italy. Strike, Jack Mahler's firm, working with NYDIG, takes my dollars and delivers them to my Milan friend in euros instantly and for free. What? How did this happen? So let's go slow. First, Strike takes my dollars from my bank account, my $1,000, and they debit it. That's a millisecond. Second, Strike works with NYDIG, and we do a trade. We convert the $1,000 into Bitcoin. It's another millisecond or two. Third, Strike works with Lightning Labs, and it zips the Bitcoin across the Atlantic Ocean to Milan. We're still in single-digit milliseconds, basically instantly. Over there's another FX trade. NYDIG converts that Bitcoin into euros. We're still in milliseconds. And finally, Strike credits my friend's bank account with final settlement in euros. Done. So what just happened? What just happened is $1,000 were moved from me in New York to my friend in Milan and converted into euros instantly and for free. How? Because for the first time in history, we have an electronic bearer asset. We've never had an electronic bearer asset. It's called Bitcoin. And an open source monetary network, which we've never had before. It's also called Bitcoin. That together can achieve cash finality anywhere in the world, anytime, 24/7, 365, with liquidity in any currency pair you care about. And notice something critical in the transaction I described, critical. The volatility of Bitcoin, the asset, was nowhere to be found. Why? Because we didn't use it. We didn't use Bitcoin for its properties as an asset. We use Bitcoin for its properties as an open source monetary network. Now, I gave you an example of two friends moving $1,000 from New York to Milan. That's cute. It's adorable. Imagine the entire global import-export industry with instant and free international settlement, right? Imagine the entire global remittance market with international and free global settlement. Imagine the entire global credit card industry with no merchant fees. I mean, use the open source networks of Bitcoin and the open source networks of Lightning. And Bitcoin, the network, will change the way we all interact and connect. This part, chapter 2 of Bitcoin, this part has nothing to do with monetary policy. This point has nothing to do with central bankers, with dollar depreciation, zero. However, there will be this virtuous, beautiful feedback loop between Bitcoin the asset and Bitcoin the network, and Bitcoin the asset and Bitcoin the network. And working together, the Bitcoin the asset specialists at NYDIG and the Bitcoin the network specialists at Strike and Lightning, they're going to get this chapter 2 flywheel in motion, and it is going to hum. It's going to hum. So just stay tuned for more.
And CEO Michael Saylor tweeted at Musk back in December, urging him to get into Bitcoin, saying, quote, Elon Musk, if you want to do your shareholders a $100 billion favor, convert the Tesla balance sheet to Bitcoin. Joining us now is MicroStrategy CEO Michael Saylor. Welcome. Thanks for being here. So Elon Musk listened. He went all in, $1.5 billion worth. What does Musk going into Bitcoin mean for investors and for the future of the digital currency?
Well, I think in the current macroeconomic environment, most corporations are beginning to realize that their cash is going to be a depreciating asset, and they need to turn their balance sheet into an appreciating asset. So the obvious thing to do is to convert dollars that are being inflated, expanded to 15% a year, into a scarce digital asset. And that's what Bitcoin is. So Elon Musk is very progressive, and Tesla is very progressive. I think this is part of a trend toward the digital transformation of balance sheets as people move from analog, traditional treasury assets like cash and bonds into Bitcoin.
I want to bring in finance Julia. Oh, I was just going to say hello to Julia. There she is.
It's Julia LaRoche here. Let's double click on that. You're talking about a digital transformation of the balance sheets. And of course, we know, I guess historically, folks have been pretty conservative about the balance sheet. You did have a seminar last week. I want to kind of elaborate a bit more on the pitch that you're giving to executives on this, and what is kind of the hurdle that must be overcome for them to get comfortable with adding this digital asset to their balance sheets?
Well, I mean, the pitch is Bitcoin is digital gold, and it's sitting on the world's first digital monetary network. That network does the job of gold 1,000,000 times better than gold. You can move it at the speed of light. You can program it 1,000,000 times a second. And it's been appreciating versus the US dollar more than 200% a year on average for a decade. So I think At this point, Bitcoin has emerged as the institutional safe haven asset. If you're a corporation and you generate $1 billion in cash flow and you buy back your stock, you're $1 billion closer to insolvency. If you borrow $1 billion to buy back your stock, you're $2 billion closer to insolvency. If you want to run your company to the benefit of your shareholders, of your customers, of your employees, and of your local community over the long run, you can't decapitalize the company. And in the modern era, cash is becoming a liability because the money supply is expanding at 15% and the purchasing power of the cash keeps degrading. Holding a 15% degrading asset for 8 years means you lose 75% of shareholder value. So the pitch is convert your balance sheet from a liability into an asset to the benefit of your stakeholders and use the world's first digital monetary network to do it. Bitcoin was engineered to do this.
I do want to kind of bring this topic up with you. Elon Musk, of course, has been tweeting a lot about cryptocurrencies, Doge in particular, also adding hashtag Bitcoin to his Twitter profile. And if you look back a couple years ago, there's some issues around tweeting about Tesla, taking Tesla private. There's a whole SEC settlement involved there. So what do you think of regulations in this space? And when you see more publicly traded companies add it to their balance sheet and how they can kind of talk about it on social media, do you think we'll see regulations come in? And if so, what should those look like?
Well, I think there's been a great advance in regulatory clarity over the past few years. I think the IRS and the SEC have both designated Bitcoin as property, and I think that's been very good for the asset class. I think that we can expect a few more regulatory advances that'll provide more clarity. And as Bitcoin approaches regulatory parity with other types of assets like stocks and bonds and gold, I think it's going to remove the few remaining barriers that have given institutions pause. I think 1,000 institutions, 1,000 corporations started adopting Bitcoin as an asset for investment in the past 12 months. I think there'll be an avalanche of thousands more that'll be coming as they start to see that this is a very high quality Treasury Reserve asset on parity with other assets.